Welcome back to Profit Path. Today, markets gained on renewed optimism for a Federal Reserve rate cut amid weak jobs data, and futures are edging higher as earnings season kicks off. If you're new, hit subscribe for straight-to-the-point market updates. Let's start the brief with a look at the markets now. Global markets rallied today as optimism around a Fed rate cut strengthened after the release of weak US jobs data on Friday. This pushed stocks higher and weighed on the dollar. The Pan-European Stoxx 600 added 0.6%, while the UK's FTSE 100 rose 0.9%. In the US, stock futures also ticked up. The S&P 500 and Nasdaq futures rose around 0.5%, while the Dow Jones Industrial Average futures rebounded after last week's pullback. In commodities, Brent crude edged up on an OPEC Plus plan to deepen supply cuts. It rose 0.9% to around $86 a barrel. Spot gold climbed 0.8% to above $1950 an ounce. And the dollar index, which measures the greenback against a basket of 6 major currencies, was down 0.2%. And now let's head over to Asia, where Japanese markets advanced today despite political volatility from the Prime Minister, his surprise resignation, and a weaker yen. The Nikkei 225 rose 0.8%, while the Topix bucked up 1.2%. In mainland China, the Shanghai Composite posted a 0.2% gain, and the Shenzhen component added 0.3%. The Hang Seng in Hong Kong rose 0.6% as property developers climbed after the central bank cut mortgage rates. Finally, Indian benchmarks kicked off the week with strength. The Nifty 50 rose above 24,800 and the BSE Sensex climbed nearly 200 points. Alright, that's the markets wrap for you. In case you missed it, here are the top 5 stories from the weekend that you should know about. First, Federal Reserve Vice Chair Lael Brainard said she supports the central bank's decision to leave interest rates unchanged last week and will make policy decisions on a meeting-by-meeting basis as the Fed assesses incoming data. Second, China has cut the amount of foreign exchange banks must hold as reserves, a move aimed at boosting the economy by encouraging lending and stabilizing the yuan. Third, Singapore's sovereign wealth fund, Temasek Holdings, posted a 4% rise in its total assets under management to a record $407 billion as of March, driven by strong investment performance. Fourth, Elon Musk says Tesla will build a new factory in Nuevo Leon, Mexico, near Monterrey. The plant will initially produce Model 3 and Model Y vehicles with an expected annual capacity of 250,000 units. And finally, India's Adani Group has offered to buy back $1.5 billion worth of bonds from international investors as part of a plan to reassure creditors after Hindenburg Research's allegations of fraud and stock manipulation. Okay, that's all for the brief. And before we wrap up, let's quickly look at the earnings calendar. This week brings a wave of earnings, including Planet Labs, Adobe, Chewy, and Synopsys. While the overall earnings season is expected to show year-on-year declines due to tough comparisons with last year's blowout results, some analysts say the reports may not be as bad as feared. On the flip side, others warn that companies could issue weak forward guidance, which could rattle investors already on edge about a potential recession. Either way, if you're invested in stocks, it's important to keep an eye on earnings releases as they could impact your portfolio. And finally, let's discuss the key events to watch out for this week. Investors are positioning themselves cautiously. Some analysts say that they see choppy markets ahead as investors will likely be spooked by any earnings misses and will jump at any opportunity to sell. Others say that there may be more volatility in store for the middle to end of July as investors digest upcoming inflation data. And then there are those who expect the market to continue moving sideways until there's more clarity on interest rates. So what does this mean for you? Well, it means that if you're looking to invest, it might be wise to wait for a pullback. But if you're already invested, it might be best to hold on and ride out the volatility. After all, as they say, time in the market beats timing the market. And that's all I got for today. If you found value, hit the like button for more and subscribe to Profit Path for your daily market insights. And if you want more in-depth analysis, check out our free newsletter, The Daily Upswing, linked below. Thanks for watching. I'll see you back here tomorrow.